All right, all right. Welcome to ORB Phase 2. All right, if you made it through Phase 1, congratulations. I'm impressed. That's awesome. And I know that that feels good. You know, like it really opens up your mind into how the market works. You're able to be more objective. And if you haven't done Phase 1, drop this video, go back to Phase 1 and watch it. All right, but let's get into the Phase 2. Okay. The one thing Tom Hogard and a lot of these like professional level traders and market wizards they talk about is it's all about risk management. Okay. You think about the times you've blown accounts and blown up accounts and like, you know, you turn a winning day into a losing day. What's the problem? The problem usually is risk management. Okay. A lot of people, right, they want to take their stop and they want to stretch it out further to give them more room to allow them to win more. Okay. Well, the problem with that is you just took, $100 risk and now it's $130 risk. Okay. And then now you also just took a 3R trade and you turned it into a 2.2R trade. Okay. So that's the problem here. All right. Well, we're going to do the opposite. Okay. We know with the orb through the back testing and through things like that. So if you're running a different strategy, figure it out. Take the time to figure it out. But what we know is that if we hit 70 to 80% on a retracement, most likely we're going to continue to 100% stop loss. Okay, like the chances are very, very, very high at that point. Once we hit that 70, 80% mark, that it's just going to continue and blow through. Okay, so why give that away? Just like that. Why give it back? We looked at the data. Why give that away? Okay. Now, are you going to get stopped out extra? Sure. A couple more times. But look what this just did. We just took a 3R trade and now it's a 4.49R. Okay. This is what matters. Okay. Now, instead of risking $100 on the trade, now you're risking 70 to make 450. These are the small things that make a difference in your trading. Okay. I'm not kidding. I'm not joking. This is not hype. This is legit. Okay. This is the stuff that will fix your trading. All right. That's why this program is written the way it is. Okay. Phase 1 is so you can prove to yourself that you can trade a trading plan, right? Without being overwhelmed with emotion. Excuse me. So once you can do that, here you go, right? Let's move on to the next step, which is this stop loss management. All right. So check it out. Like legit, we just took a 1 to 3 and turned it into 1 to 4, 4.5, right? That is fantastic. Okay. Yes, we are going to take a couple extra stops, but they're going to be smaller. Okay. So that is one option that you can do. You don't have to do this. Okay. But this is an option that you can start to do. So now you're reducing risk. Okay. Another thing I like to do. Okay. And then here comes your first discretion. Okay. Here comes the first time in this series, whatever you want to training, whatever you want to call it. Phase 2, your first discretion. Okay. We get this pushed down. Boom. We have this mini consolidation right here, right? We kind of bounce around a little bit. It's a little wicky. What do we do right here? Bam. We get a strong push down. Okay. After a strong push like that, we just had a push. Now we're going to consolidate. Now we're going to push again. Well, this is where I would de-risk. There's no reason. Especially we made it that far. Okay. So let's go ahead and do this. And let's go ahead and put this back originally. Okay. This second push was over 2R. Okay. This push right here. All right. That's showing me that we have momentum in the direction I feel the trade is going to go. Now, do I want to start trailing and start like pushing, and like looking to take profit? No, I'm not doing that yet. Right. I want to stick to my plan. I'm going to take my 1 to 3. Okay. That's very important. All right. Bam. My take profit is sitting here. Okay. It's staying there. All right. And then I've de-risked down. Okay. And there I am. And so this is my original trade now. Okay. My original entry from the original orb was a 1 to 3. Because I de-risked a little bit right off the bat. Now it's a 1 to 4.49. Okay. And then as soon as we get this push down and I'm in the trade, bam. Okay. I'm not taking profits early. Okay. I'm going to allow this thing to come back and get me. All right. I am. I'm going to allow it to come back and either break me out or hit me at break even, or I'm going to, start to trail, which we're going to go over that in just a second. Okay. Now, so here we are. We're going to say the market is right here. Okay. This is the market. This is what we're looking at this candle. Okay. And then we get a couple more prints, right? Boop, boom. And now we're like, okay, cool. So now we're way down here. So one of the things you can start to do is to trail your stop loss, right? Next candle, what happens? Boom, stopped out. Okay. So you're not trailing to be ultra aggressive, okay, in my opinion. From my experience and from the data, I don't trail ultra aggressive. But where could I trail? The original push right here, which created the orb, is what got me in the trade. We had a consolidation and we had another push, okay? So maybe I just come above this push right here. It's not much, that's not a lot of profit, but it's something. If this were to turn right here and come all the way back and hit me, which I promise you they will sometimes, it's going to stop me out early. Okay, but the market continues. We get into this consolidation. We have a little phase. We have a little box right here, right? This is where the market's consolidating. Okay. Now it's like this. Boom, boom, boom. Now we're here. Okay. Bang. Whoop, hold on. Whoop, wrong one. Now the market's here. Okay. So now we're starting to push away from this box. Now my take profit is not very far away. Okay. But what else can I do? I can move my stop up to what? This right here. This was another fair value gap that was starting to push out of this range. Easy peasy. Okay. I can start trailing. Now I'm not trailing out of fear. I'm not looking at the profit. I'm not like calculating, oh, well, if I get out here, it'll be a $98 profit. And, if I get out here, then, oh, I'm just going to start trailing. No. Follow a logical plan. Don't pay attention to the numbers. Just pay attention to the market and what it's doing. Okay. I saw this range. We pushed out of the range down in here, which I'm almost at take profit. That's great. Okay. I can start to trail. All right. And so as we push out of this range and we continue down, now I know the take profit is really close, but let's just say for learning's sake that the take profit was a little bit further away. And we get this giant push out. So we get this fair value gap coming out of this range. This is where you can start to have discretion, to move this to the range, because sometimes we'll get a back test of that little consolidation right here and get a push down. So this is where you can start to trail, but that's where the trailing logic comes in. But you're not changing anything from the original take profit. We're not doing that. Okay, that's another phase. For now, we're just legit, just taking these trades as you just saw. Okay, easy peasy, no problem. Logic flow. Don't let it eat you up. Okay. All right. So, and remember, sometimes you're going to trail, and you're going to get stopped out, and you're going to miss out on full profit. Okay. So let's go ahead and look at this trade. This one was pretty like shebang all the way. Okay. But what are we going to do right away? Right. If you need to figure it out, you can grab your little Fibonacci tool. All right. And at the 0.33, right, that's where I'm going to move my stop, something like that. Okay, I'm going to cut off about 30%. Okay, puts me about a 4.5 R. So you can see these already look better, right? These already look so much better. And yes, guys, there's going to be times it comes back up, kapow, and stops you out, and then it just runs. Okay, that's going to happen. All right, you just got to get used to that because that's trading. All right, let's move this up here. All right, so this one is just pretty much like straightforward. Okay, so let's just go ahead and continue on because that one is like those are the ones we love. You get in, you put your stop where it goes, and it just runs the take profit and you smile and you're done. But let's take a look at these, right? So, don't know if I would have actually been able to trail any of these, but let's go ahead and just move these down. Here, let's go ahead and let's do it right, okay? So let me grab the Fibonacci, however you want to measure 30%, okay? So there we go. So 0.33 is right. Stop fighting me. There we go, okay? Basically makes it yet a 4.4, 4.5, okay? As long as you're somewhere around there, that's great. Okay, so see right here. So instead of losing 100, I lost the 70. Okay, that makes a difference. So it's $30 savings. What happens here? Same thing, right? I'm going to go ahead and move this until I get a, there we go, 4.7, right? So I saved another $30. Okay, boom. Same on this one. Okay. We're going to try and do this because the candles are going to, my magnet's going to grab. Wait. 4. I saw it. All right, 4.9, whatever. Okay. So 4.5 are bang, we get stopped again. Okay. But think about this. So this was a 300 loss day. Okay. Now it's a what? 30, 60, 90. We saved $90. So now it's a $210 loss day instead of a $300 loss day. Okay. Simple, take profits. Okay. And if you're trading a different strategy, you need to understand that some strategies thrive on those reversals. Okay. And some don't. So you need to know, like on average, we just know that 70 to 80%, once the stop loss comes into that zone, right, and you're getting this like pullback, most of the time, once it hits that, probabilistically speaking, it's going to go ahead and run all the way and stop you out. So why not save that 20, 30 bucks a trade? Okay. Small things like that add up. Guys, that's phase 2. That's it. That's all you're going to do. Okay. So you're just going to go over the trailing stops. Okay. And you're going to, move in your stop loss just a little bit, and I would follow a system. I really would follow a system 100%. Okay. Because if you follow your feelings, then depending on the size of the candles, like how big your charts are spread out, like, you're going to look at something like this and see this big, you're just like going to freak out, like it needs to be a logical step through process. Okay. If you're trading the orb, the way that we're teaching in here, I recommend just putting it at, 70 to 80% of your stop. You're just going to close it in that extra, 20, 30%, somewhere in there, and you're going to call it good. And if it stops you out, it stops you out. If it doesn't, it doesn't. Okay, but this kind of stuff, this is what helps smooth your equity curve. And if you are trading prop firms, that's a huge thing. Your equity curve is everything if you're wanting payouts, all right? So I really hope this video has been helpful to you. You can jump into the Discord and, ask us some questions about this. We'd love to hear like how your journey is going with this orb challenge. And I've got the website as well. The link will be in the description below. I don't even ask for your email on this website. You can just legit just jump in and, follow, these phases and learn from them. And I'll see you in the next video.